Hi everybody, today is an exciting day. Today we will be speaking to the CEO of Nairobi Securities Exchange, Jeffrey Odundo. We normally call him Jeff. So if I call him Jeff, I just know it's Jeffrey Odundo. And Jeff Odundo is a very seasoned investment banker with more than 26 years in the financial services sector. And 20 of those years he spent in the capital markets. Today, at the helm of the Nairobi Securities Exchange, he has an opportunity of deepening our market, and they have just launched last week a significant milestone, that is the derivatives market. This is the second derivatives market in Africa. What an accomplishment. You're watching Invest in Africa. My name is Pius Mugo, the Managing Director of Nabo Capital. Jeff,
Nice.
welcome.
Nice to have you.
Yeah.
Nice to be investing in Africa. I like this.
Absolutely.
Quite a nice show name.
Exactly. And second derivatives market in Africa.
Yes.
And it's taken 8 good years to come this far.
Correct.
Just help us to understand how the journey was. Why did it take 8 years to come this far?
Pius, first of all, is to say that we, first of all, very grateful to all the partners that have been in this project, starting from our regulator, the Capital Markets Authority,
Yes.
the Central Bank of Kenya, the Kenya Association of Stockbrokers and Investment Banks, and the government for really making this happen. I think it's been a journey that has involved multiple level of stakeholders to come together to ensure this happens. So when we began this journey, I think it was out of a background of what is the aspiration of Kenya under Vision 2030.
Yeah.
And under that economic pillar, the key issue that relates to the capital market is how do we help the country become an international financial center. Nairobi essentially being an international financial center. And as part of that, we set up a number of objectives under the capital markets master plan on what we needed to do, what components we needed to do to help the government achieve that aspiration. And part of that was how do we develop our capital markets.
I see.
So as the executing agency of the plan,
Yes.
we then synthesized those objectives and brought them a bit closer to home and said we've had a very well established spot market. Today Kenya is among the top 5 equity markets in Africa. We attract about 70% of international capital trading on our market. Our policy incentives have been geared towards attracting this foreign flow. For example, today foreign investors can actually acquire almost 100% of any company. We don't have restrictions on that. We don't have capital gains tax. We don't have our currency is free floating. And those are the little basics that foreign investors look for. So having established that and having seen how our market was deepening, having a very sophisticated investment community where fund managers, investment banks, REIT managers, etc. Then we really ideally were convinced that the basic foundation of setting up a new market was in place. Our spot market was now well established. And we needed then to look at how can we create a different market to help catalyze the performance of our spot market and also introduce different assets that could just broaden that. As part of that as well, in order for us to achieve the international financial center status and attract investment banks here, we needed to really broaden our offering and also deepen the market by bringing in tools that could protect volatility. And volatility here means the movement of values of assets in the market. And so in order for that, the derivatives then became the highly relevant conversation towards achieving that. And at the back of the support from the CMA, who was really key as a first step, because we needed to have regulation to establish the derivatives market. And so the CMA came up with the derivatives market regulations, which was now going to be the framework under which this market was to be developed. On our part as MSC, we then began the journey of starting to identify the technology that we'd use, doing demand studies, doing business case, because we did, and also doing international visits into Brazil, South Africa, to really understand what are derivatives and what does it take to set up a market. And when we went out there, Brazil, for instance, we went for the WFE IOMA conference, which is an international conference of exchanges and CCPs. Half of that discussion, I can tell you honestly, we never got anything. We were there in body, but we never really could understand. And so, the one question our former chairman asked, Eddie Njoroge, can you tell us what we need to do to set up the derivatives market in Kenya? And the guy said, education, education. And these are markets that have been there for 20 plus years. And they say this is an investment you need to continuously educate people. So we realized we needed to go back to school and really understand what derivatives are. So we put in place this internal staff team, a very highly trained internal staff team, and of course we identified individuals who traded, who have actually even practically traded this product, to come in as a core team and set up the market, and taking us through understanding what these markets are, etc. So that began, and also brought in consultants from South Africa who were already running a market in South Africa to come in together and help us put this together. And it started off well. And 2 years down the road, I think the team was quite clear on how this market is set up, how it works. And we're also delighted that we have a very educated society, investment community. And so the conversation started being relevant and being understood. So that was 2012, 2015. I then took an executive role. And the team felt that we were practically ready. And I was very delighted to say that one of my first achievements in the first 90 days is to set up the derivatives market will be live. My God, it's been 90 days since then. It's been 8 years now.
It's been 8 years.
5 years. Okay, 5 years since. 3 years in 2015, but 8 years in total. And today, I think the journey then, we did not anticipate the infrastructure that we needed to put up was going to be very complex. The technology, the education and sensitization of the market, which has been one of the biggest things we've dealt with, and then getting the approvals. The approval was just not to our regulator, but also to the regulator of the banks. Because you need a clearing member, which can only be a bank. And so you need to address all the concerns of all the stakeholders. And I'm glad to say that the experience of going through that approval process has actually, at the end of the day, we really feel it was worth it. Because we addressed every concern that any of the stakeholders would have, which has now strengthened our risk framework, has ensured the products we bring are going to be easy to understand. We're going to make it very simple for the clients to trade on these products. The risk management and all the issues have been addressed. And so I think that process has been worth a while. And last week we launched the market, and today we've got about over 25 contracts out there. Which have been traded on. And we call them open interest contracts, and they're not there. So the journey has begun. It's exciting. And we're really looking forward to making this a very great market for Africa. That's what we're looking at.
Wow. Clearly there is a lot to say, and I think we're going to take a pause. So stay tuned in as we delve deeper into what was just launched last week, the derivatives exchange market.